financial interconnectivity and the green transition, two topics of paramount importance in the world today. Our distinguished guests will explore the ways in which the Renminbi and Chinese banks in Hungary can contribute to the emergence of Budapest as a true financial hub in the Central and Eastern European region. The event explores the role of central banks in driving the environmentally sustainable financial transformation and delve into the exciting opportunities that lie ahead. This is an opportunity not to be missed. Join us for this live online event and be a part of the financial revolution that is sweeping the world. Follow the esteemed financial experts at Budapest Renminbi Initiative Conference.
Your Excellencies, dear distinguished speakers, ladies and gentlemen, it is my utmost pleasure to greet you all today at the Budapest Renminbi Initiative Conference 2023. My name is Csenge Gabriela Ibolya, and I am honored to be your host today at this important event. The Magyar Nemzeti Bank launched the Budapest Renminbi Initiative Conference in 2015 in connection with the central bank's Renminbi Program. The international importance of the renminbi is constantly growing. Consequently, the Budapest sources of Hungary and to foster Chinese-Hungarian economic partnership, especially the ties between the People's Bank of China and the Magyar Nemzeti Bank. The Budapest Renminbi Initiative main goal is to strengthen Budapest's regional role in the Chinese Central European economic relationship and promote the growth of cross-border economic activity. The Budapest Renminbi Initiative Conference intends to contribute to these goals through the development of Chinese-Hungarian economic diplomatic relations and international knowledge sharing. As the world has learned to live with the COVID-19 as an endemic disease, we are now striving for a hybrid event, bringing back the personal encounters to Budapest, the capital of Hungary, in the heart of Central and Eastern Europe. Taking advantage of digital solutions proved during these years, we give the opportunity to join online for those whom a personal attendance would not have been feasible. We hope that this way the mission of the Budapest Renminbi Initiative will reach a wider audience all over the region. This year's event is organized under the theme Financial Interconnectivity and Green Transition. The program will start with a high-level opening session, allowing us to listen to the insights and expertise of senior decision-makers who have first-hand experience in these topics. It will be followed by two panel discussions with the participation of senior professionals and world-renowned experts. The first panel will discuss renminbi financing and the role of Budapest as a financial hub in the CEE region. Then the afternoon panel will focus on opportunities of the central banks in sustainable finance and green funding. As the first speaker of the high-level opening session, please welcome Mr. Mihály Patai, Deputy Governor of the Magyar Nemzeti Bank, the Central Bank of Hungary, who will deliver his opening speech.
Thank you very much. Good morning, Your Excellency, esteemed guests, ladies and gentlemen, dear friends and dear colleagues. Let me warmly welcome you to the 7th annual event of the Budapest Renminbi Initiative Conference. Please allow me to express special gratitude to our distinguished speakers for joining us today in person. The Chinese economy recovered quickly from the coronavirus pandemic crisis. The People's Bank of China also successfully managed to offset the negative effects caused by the pandemic using various instruments to help maintain the stability of domestic and international renminbi markets. With introducing several monetary instruments, the PBoC improved the position of market participants involved in renminbi financing. The PBoC is also at the forefront of developing central bank digital currency, which can reshape the whole way of how we think about money and central banking. China was among the first to recognize the importance of green finance, and it has been pushing to development of green finance to support its industrial upgrade and anti-pollution drives in recent years. The Hungarian Central Bank, similarly to PBoC, also put a great emphasis on digitalization, financial innovation, and environmental sustainability. Regarding the partnership between the two central banks, I have to mention the active cooperation is ensuring financial stability, for example, via swap agreements. Our central bank has been among the first ones in Europe to conclude a swap agreement with the People's Bank of China in September 2013. Actually, we were the first one on the continent. A couple of days before, United Kingdom has signed, the Bank of England signed an agreement with them. The aim of the agreement is to support trade and investment relations between the two countries. This swap agreement has been renewed several times and is still in effect, and we are very grateful for that. Let me just mention to you that Mr. Yi Gang, the governor of the People's Bank of China, surprised the audience recently, in a very esteemed audience of central bankers and ministers of finance, announcing that the People's Bank of China has concluded 30 swap agreements in the last couple of years in the amount of $600 billion, which is by far the biggest swap stock among the central banks. And it was very important because for many countries, this was stabilizing the forex market. Recognizing the significance of growing international role of the renminbi, the Hungarian Central Bank announced its central bank Renminbi Program already in 2015. The same year, the Hungarian Central Bank's Monetary Council decided to invest in Chinese bond market to reflect the developments and in the internationalization of the Chinese currency. To honor this fruitful development of the economic relations between Hungary and China, the Magyar Nemzeti Bank launched the Budapest Renminbi Initiative Conference at the end of March 2015 in connection with the Central Bank's Renminbi Program. The aim of this initiative is to take advantage of the growing international weight of the renminbi to strengthen Budapest's regional role in the Chinese-Central European economic relationship. The Hungarian-Chinese financial systems are becoming increasingly interconnected. Bank of China has been operating for many years now. Meanwhile, the China Development Bank already has a Budapest representative office, and the China Construction Bank just opened its Hungarian branch a few days ago, and we were together there. As a result of the Hungarian-Chinese cooperation, the presence of the Chinese banks in Hungary and the financial innovations arriving through them from China, Budapest, next to Warsaw, has become a financial hub in the CE region. Today's Renminbi conference is also a reflection of this unique cooperation, as the first panel of the conference is organized in partnership with Bank of China, Hungarian branch. We hope this cooperation is going to continue in the future, and I understand that you have promised us this morning, and we are very grateful for that. The main topic of today's conference is the financial interconnectivity and green transition, the opportunities of central banks in the environmental sustainable financial transformation, the role of the renminbi in the CE region. These topics cannot be ignored in the dramatic changes that have taken place in the world recently. The manifold effects of the inflation, disruptions in supply chains, climate change, and geopolitical turbulence have posed incredible challenges to the global economy. I have to admit that I do not know yet how these problems will be solved, but I am absolutely certain that the solutions can and must be found only together via permanent dialogue and international cooperation. I wish you all fruitful, inspiring, and dynamic discussions today, and I sincerely hope that the Budapest Renminbi Initiative Conference 2023 will provide a great platform for a professional dialogue. Thank you very much.
Thank you, Governor Patai, for the inspiring speech that indeed set a great basis for today's discussions. Following Deputy Governor Mr. Mihály Patai, I would like to ask His Excellency Mr. Chao Yang, Minister Counselor and Chargé d'Affaires ad interim, the Embassy of China in Hungary, to deliver his opening speech.
Mr. Bodoy Mihai, Deputy Governor of the National Bank of Hungary, Mr. Xu Chen, Chairman of Bank of China Europe, Professor Zhang Jun, Dean of School of Economics, Fudan University. Ladies and gentlemen, good morning, Uniport. It gives me great pleasure to attend the Budapest RMB Initiative Conference 2023, jointly hosted by the National Bank of Hungary and the Bank of China. Since its first launch in 2015, the conference has played a leading role in promoting financial cooperation between China and Hungary. With its far-sighted vision, the National Bank of Hungary has been a firm supporter of the internationalization of RMB and an energetic promoter of China-Hungary financial cooperation. I would like to take this opportunity to express our sincere appreciation to the National Bank of Hungary. As we gather in Budapest to discuss the internationalization of the RMB and financial cooperation, the first fact we must realize is that the world today is facing profound change unseen in a century and has entered into a new period of turbulence and transformation. Great change bring about reforms and breed a new order. The global financial landscape is undergoing major adjustment, and the multipolarization process of international monetary system is speeding up. In this context, what impact will RMB internationalization bring to the world? I would like to share with you some of my personal views. First, the internationalization of RMB provides a reliable new choice for countries around the world. Brazilian President Lula, during his recent visit to China, raised such a question worthy of consideration. Why do all countries use US dollar for settlement? Why can't the RMB or any other currency become an international settlement currency? President Lula's question, expressing the voice of many countries, represents their expectations for the diversification of international currency. More and more countries choose the RMB as a currency for international trade settlement. So far, China has signed bilateral currency swap agreements with more than 40 countries and regions. The People's Bank of China has authorized 31 RMB clearing banks in 29 countries and regions. In 2022, China's cross-border RMB settlement amounted to more than 42 trillion yuan, an increase of about 3.5 times over 2017. In March this year, RMB was used more than US dollar in Chinese cross-border transactions for the first time. Second, the internationalization of the RMB has injected valuable stability into the volatile international financial market. At present, due to the impact of geopolitical conflicts and the radical withdrawal of economic stimulus policies in certain developed countries, the risk in international financial markets have increased significantly. The collapse of several banks may cause snowball effect if it is not prevented timely. All countries should pull together in times of trouble, but a certain country abuses its currency hegemony to make the world pay for its domestic economic problems, even uses the currency and currency payment system as weapons to impose unilateral sanctions, which seriously disrupted the international financial order and has caused capital outflows, currency devaluation, inflation, high debt in many countries, especially developing countries. China has always adhered to a responsible macroeconomic policy and a prudent monetary policy, and the RMB exchange rate remains basically stable at an appropriate and balanced level. China never adopts a beggar thy neighbor competitive devaluation policy or a strong flood stimulus policy. We have attached great importance to preventing and diffusing financial risks and have kept on reforming our financial regulatory system to safeguard the stability of the financial market. This March, China announced the establishment of National Financial Regulatory Administration, which will further enhance its ability to cope with financial risks. As a responsible major country, China is ready to work with the international community to jointly maintain a stable, fair, open, and transparent international financial market. Third, the internationalization of the RMB will create more opportunities for the world. Backing the global trade, the Chinese economy has shown strong recovery and resilience. In the first quarter of this year, China's economy grew by 4.8% year-on-year, and the annual growth rate is expected to be around 5%. China will continue to open wider to the outside world and share with other countries its market and development opportunities. With the world's largest growing middle-income group, China imports about $2.5 trillion in goods and services every year. Last year, China's foreign non-financial direct investment reached 785.9 billion yuan, up 7.2% from the previous year. The internationalization of the RMB will help other countries better participate in China's opening up and share the dividends brought by China's development. Dear friends, the solid foundation for the internationalization of the RMB is that China will maintain long-term and stable development, and the path to RMB internationalization is to expand opening up. We have set the goal of advancing the great rejuvenation of the Chinese nation on all fronts through a Chinese path to modernization, and we are forging ahead towards this goal. China will focus on promoting high-quality development to give its people a better life. Achieving modernization for 1.4 billion people as a whole is an unprecedented challenge. China must focus all its energy on achieving high-quality development and constantly meet the people's ever-growing needs for a better life. We will pursue a people-centered approach to development, uphold social equity and justice, ensure that the fruits of development are shared by all people in an equitable way, and common prosperity is achieved for all. China will accelerate its high-level opening up and deepen its integration with the rest of the world. What has happened proves that opening up was key to China's economic growth over the past 40 years, and high-quality development of China's economy in the future can only be achieved in greater openness. This year marks the 10th anniversary of the Belt and Road Initiative. China will host the third Belt and Road Forum for International Cooperation to further strengthen connectivity with other countries. The EU is an important economic and trade partner of China. This year also marks the 20th anniversary of the comprehensive strategic partnership between China and the EU. In recent years, some people in the EU, after the Cold War mentality, have hyped up the argument of over-relying on China and advocated decoupling and severing supply and industrial chains with China. Facts have proved that our mutually beneficial cooperative relationship serves the common interest of both sides. Decoupling will not hinder China's progress, but will only let the EU meet the opportunities brought by China's development. We sincerely hope that the EU will abandon thoroughly prejudice against and misconceptions about China and avoid politicizing economic and trade issues. China is ready to work with the EU to activate mutually beneficial cooperation in various fields and inject new impetus into the development of China-EU relations. China will stick to the path of peaceful development and make greater contribution to global peace. China firmly pursues an independent foreign policy of peace, upholds international fairness and justice, and firmly opposes hegemonism and power politics in all forms. In recent years, President Xi Jinping has put forward the Global Development Initiative, Global Security Initiative, and Global Civilization Initiative, offering Chinese solutions to global problems. On the Ukraine issue, China has been actively facilitating peace talks and playing a constructive role in promoting the political settlement of the crisis. China opposes adding fuel to the fire and taking advantage of the crisis to make profits. and is firmly against certain countries using the crisis to stoke bloc confrontation. All parties should create more favorable conditions for the peaceful settlement of the conflict rather than setting up more obstacles. Dear friends, China and Hungary are comprehensive strategic partners. On the basis of mutual respect, mutual support, and mutual trust, the bilateral relationship has become a model of state-to-state relations. As the pandemic recedes, China-Hungary relations have entered into a new period, with exchange and cooperation in various fields developing vigorously. We will actively support Hungary in achieving its national development goals, expand cooperation in trade, infrastructure, scientific, and technological innovation. We will encourage more Chinese enterprises to invest in Hungary. We will promote exchange in education, culture, tourism, and other fields, and strengthen interactions between local governments, so that bilateral relations will take root at the grassroots level and bring more benefits to our two peoples. Finance is the catalyst for cooperation. China-Hungary financial cooperation has been a pace-setter in the region. We have jointly created many firsts. It is hoped that the financial institutions of the two countries will continue to work together to create more high-quality financial products, establish more high-level cooperation platforms, and build more efficient communication channels so as to provide strong support for bilateral exchange and cooperation. Finally, I wish the conference a great success. Thank you. Gosnom.
Thank you, Your Excellency, for your enlightening speech. As the next speaker of the high-level session, please welcome Mr. Chen Su, Chairman, Bank of China Europe SA, with a warm applause on stage.
Your Excellencies, honorable guests, ladies and gentlemen, good morning. It is my great honor to be here to address you on this year's Budapest Renminbi Initiative Conference. First, I would like to thank the Central Bank of Hungary, MNB, for organizing such a wonderful event. Face-to-face interactions facilitate communication and build trust on a personal level. Our communication and collaboration promote cultural understanding and ideal exchanges, which fosters mutual trust and respect. Such trust and respect are the foundation for countries to jointly tackle global challenges, such as climate change, poverty, equality, and pandemic prevention. Both Hungary and China have been front runners in the ages of globalization. A reciprocal cooperation between our two nations based on trust and mutual respect has produced a long-lasting, better investment environment. Nevertheless, it is also important to acknowledge that global cooperation is not always easy, as it could be hindered by varying political and economic interests. In fact, after the pandemic, the world has entered a period of turbulence and transformation. The global supply chain is being redistributed. The inflation is running rampant across the globe. Not to mention that we have an ongoing war here in Europe, which is a disaster to human beings, business, and the natural environment. Some people may claim that the geopolitical and economical paradigm have permanently changed. We are in an age of fragmentation and regionalization. If the world is indeed changing, how can we prevent the world from becoming fragmented? And what should we do to preserve our global cooperative tradition? I believe this forum may help us find the key. I'm humbled to propose 2 points here. First, we should join our hands to create a more balanced and diversified global financial system. Over the years, the US dollar has got increasingly weaponized. It is undermining the credibility and the stability of our global financial system. Even Secretary Yellen admitted recently that Washington's imposition of unilateral sanctions on countries around the world would weaken the dominance of the dollar. Indeed, if the US dollar is used as a foreign policy tool, rather than being a stable and reliable global currency, it could result in a loss of faith and stability in our international market. Therefore, it underpins the necessity to establish multipolar global financial system to avoid being too concentrated in one single currency. The internationalization of RMB, like a euro, would help de-risk the business disruption and better ensure the economic predictability. Besides, RMB can help the enterprises to lower their financing costs in a period when the interest rate of the US dollar keeps on rise. In fact, more and more countries started using RMB as one of their trade settlement currencies. In 2022, 90% of China's cross-border trading in goods was settled in RMB, 2.2 percentage points higher than 2021. As Mr. Yang just mentioned, in March 2023, RMB overtakes US dollar for the first time to become the most used currency in China's cross-border trade and investment. Also, PBoC Governor Mr. Yi Gang recently mentioned that China has largely ended regular foreign exchange interventions. Now, the value of RMB is mostly determined by the market, and it would surely contribute to accelerating the progress of RMB internationalization. Obviously, Rome was not built in a day. Research report published by POC indicates that by the first quarter of 2022, the RMB internationalization composite index reached 2.86%, a year-on-year increase of 14%. However, the gaps are still big compared with the indexes of other major international hard currencies. The US dollars, 58%, or the euros, 22% for instances. Second, economic decoupling would benefit no one and rather worsen the global economic fragility and unemployment. The year of 2023 marks the 20th anniversary of the China-EU Comprehensive Strategic Partnership. As Ms. von der Leyen stated recently at a think tank event in Brussels, it is neither viable nor in Europe's interest to decouple from China. Since the end of last year, leadership interactions between China and Europe had got resumed, while the direct dialogues and the cooperation are now in full swing. The trade between China and the EU demonstrates its resilience and is growing at a faster pace. In 2022, China-EU bilateral trade in goods totaled $847 billion, up 2.4%. A total of 60,000 trains were operated between China and Europe, transporting more than 1.6 million TEUs of cargo, both of which were record highs. EU investment in China grew by over 90% year-on-year. The yearly investment flow from Chinese companies to EU reached $7 billion, while the stock of investment by the end of 2022 reached $102.9 billion. Nobody should pay a price to overlook the fact that enterprises from both sides have been benefiting from a stable and long-term prosperity with ever stronger economic ties between China and the EU. I'm glad to see that many of us participating today have made our own contribution to facilitate the trade and investment between China and Europe. For instance, during the Shanghai Import Expos over the past 4 years, Bank of China has provided one-to-one matchmaking services for more than 3,800 visitors and 7,800 buyers, and helped strike 4,500 intended deals. many of which are for Hungary as well as other EU countries. Going forward, we should prioritize on supporting new driving forces of the China-EU Comprehensive Strategic Partnership, especially in the area of green transformation and sustainable growth. China and the EU have a shared interest in these green topics and have a high degree of complementarity in transforming the world into an open and a green one. Ladies and gentlemen, the year 2023 also marks the very first year after the COVID pandemic, and the world is undergoing profound changes unseen in a century. I'm fully convinced that with our joint efforts, we can not only meet our shared challenges, but also seize enormous opportunities brought by these new changes. Let's work together to assume our social responsibilities and make continuous efforts in promoting the global communication and the cooperation. I wish this exercise a great success. Thank you.
Thank you, Mr. Su, for your comprehensive and in-depth opening speech. As the final speaker of the high-level session, it is my pleasure to invite Mr. Jun Zhang, Dean of the School of Economics at the Fudan University.
Right. Good morning, everyone. Pretty very much honored being invited. To make a little bit thoughts about the renminbi issue in the context of China and the rest of the world. I think that in terms of the gravity of trade, of economic growth, has been increasingly, made ahead of, East, as opposed to the current status of the growth, which is dominated by, the Western industrialized economies. I think that this is something inevitable because, if you're looking back, the 30 years back, everybody believed that China going to be, the very important driver of the economic growth in the world, simply because, the rise of China has been, generating the, very strong, spillover, to the rest of the economy, especially through, establishment of the supply chain, penetrating into the different industry, which is going to cover almost every region of the, global economy. So if you look at the statistics, the share of China's GDP, it's been rising, continuously, followed by the, the share of trade of China, in the global economy. I think more than 10 years ago, when I made almost this, similar remarks in the big gathering in Copenhagen with my colleague from Peterson Institute of International Economics, Arvind Subramanian, who just published the book of the Eclipse, who are telling the story of how China could catch up with America in about 25 or 30 years. So during that period of time, everybody looking at the path of the growth of China, which put China on the very, I would say the frontier, of the, economic capacity, of the emerging market economies. And then the question here is, whether or not the Chinese currency is going to become one of the alternative, to the existing one, U.S. dollar. Although the Chinese government denied, any of the attempt, to be the substitute for U.S. dollar, but the fact is, the importance of the Chinese currency renminbi, has been really increasingly very rapidly. So then the question is how we could make projections, of when that renminbi is going to be, for instance, one of the few currencies in the global economy which has been, widely accepted as the reserve currency. Then the three parameters, three variables being mentioned at that time, in Copenhagen. The first one is definitely the share of GDP, and then also, the share of trade, and both of these shares that China going to have a very, I would say, confidence in raising this, is proportion both of the GDP and trade, which is most likely to have the share which is quite, equivalent to that of the U.S. and something like that, for instance, in the 20 years to come. But the one weak point, I think at that time during the discussion panel that somebody, questioned a lot, which is the, external financial strength of China. Because that is definitely, one of the determinants when we're making the projection of when Chinese renminbi can be, globalized as a reserve currency. So what is the external, financial strength? I think a lot of people, including the economists, believe, even if China is going to have capacity to raise its share of GDP and trade in the global economy, but how China could manage, to improve the external financial strength before China could eventually make the renminbi widely accepted as global currency. I think right now, about 14 years later, today, we see that China has done much, to improve the external, capacity to maintain its status in the, financial market. I think by having said that, so it is very important, for people to recognize today that, what has been done over the past 10 years, in both China and the rest of the economy, I think is actually, the gradual, improvements in the external financial strength. Because you have to have the architect, a design, to try to put China in terms of financial strength, in the central point, of that system, which could cover, different region, as a I would say the instrument to let the renminbi become increasingly, accepted through the settlement of trade or through the investment. So if you look at what happened today, is definitely the spillover, of this, capacity build up by China, which I think so you can, empirically fail in both ASEAN country and the Central and the Eastern European countries. So these two regions right now, I think they play the vital role, in enhancing of the external financial strength of China. So so in that regard, I think the the Budapest is definitely going to play a very important role, being the self designed as financial hub, to facilitate the establishment of the architect, of the financial strength of China. But at the same time, I think the Chinese leadership has, initiated quite a number of times that, the importance of the Silk Road, and Belt Road Initiative, which also been very important ingredients of the architect, for the Chinese financial system to be stronger, through these initiatives, to try to make the renminbi widely, accepted as a global economy. So, so in that sense, financial, connectivity across the region has been really the key, for further improvement of this architect, to be laid down in the different regions, including the Central and Eastern European countries. So connectivity is going to be also, at the same time, I think it's going to be facilitated as well through the usage, of the renminbi, as a means of payment. So this is actually two-way traffic, So you have to have the architect, and the strategies to try to make this system stronger and been, spreading over the different regions, especially, in the region of Asia and also the Central and Eastern European countries. But also, you have to have, strategies like the Belt Road Initiative, Silk Road, to try to, put the countries together through trade and through investment. So also finally, I would think that the central bank in the different regions have been vital, to this creation of the connectivity, which definitely going to make the Chinese financial strength stronger and renminbi being, widely accepted. So, the scope of cooperation, financial cooperation between the regions, I think can be, move faster and go beyond, some of the limit, of the capacity. For instance, the new development bank, headquartered in Shanghai, I think it can also play, more roles than general people expected. And also the ADBI, for infrastructure, I think financing is also definitely needed, in both ASEAN countries and the Central Eastern European countries. So financial cooperation, I think it can be enlarged to cover the different roles, infrastructure financing, for bond issue, especially renminbi-denominated bond, could it be a very important, I would say the product that need to be, created and also need to be developed very comprehensively. So I hope that discussing this conference would be very suggestive and constructive. So we could have more ideas being rich, I would say conclusively, so that we could have the collective action to move forward. Thank you very much.
Thank you, Mr. Zhang. It was indeed a thought-provoking speech. After remarkable speeches of the high-level opening session, there's a short coffee break coming up now, which will be followed by the first panel discussion. Thank you. Dear audience, welcome again at the Budapest Renminbi Initiative Conference 2023. After the remarkable opening ceremony, let us start with the first panel today titled Budapest as a Financial Hub in the CEE region, Renminbi Financing and Chinese Banks in Hungary. Ladies and gentlemen, as the first part of the panel, we will have a lead speech from Mr. Kexin Li, General Manager of the Bank of China CEE ZRT and the Bank of China PBoC Limited Hungarian branch. Mr. Li has been the CEO of Bank of China CEE ZRT since August 2020. Before his appointment, he held several positions at the Bank of China head office and Suzhou branch. Mr. Li, welcome.
Mr. Mihai Patai and Mr. Xu, distinguished guests, ladies and gentlemen, I would like to start by expressing my gratitude to Central Bank of Hungary for the recognition given to Bank of China as an official partner of this conference today. We are deeply honored to be part of this important event. It is great to attend this conference in person. Just like Mihai said last night, yeah, it's very different from online conference. So the 2-year pandemic challenge made us realize that nothing could be ever as valuable as in-person interactions. With regard to the topic of the panel discussion, first, please let me share my perspective on the role of CEE region and the progress made by Budapest in the offshore RMB market. CEE region occupies a crucial position on the map of financial world, linking European markets with the Belt and Road Initiative. It is an ideal location for financial networks and two economic powerhouses to connect. And the Bank of China holds the distinction of being the first Chinese bank to enter Hungary 20 years ago, recognizing the important role Hungary plays in the CEE region. As part of our CEE region strategy, we have centered our regional headquarters in Budapest. Over the past 2 decades, we have had the privilege of witnessing the financial infrastructure development of the offshore RMB market in Hungary. In 2015, the MNB announced the start of RMB program. In the same year, Bank of China Hungarian branch was appointed by the People's Bank of China as RMB clearing bank in the CEE region. Later in 2020, the scope of CIP's direct participants expanded to Hungary. Numbers that demonstrate the remarkable development of the Hungarian market. According to Swift Watch data, by the end of last year, the clearing volume of RMB in Hungary rose by 450%, while the number of clearing transactions increased by 570% compared to 2015. The growth of data is closely linked to the Hungary's recognition as an attractive investment location and RMB financial hub in the region. Companies and banks also benefit from various factors that go beyond the typical features shared by financial hubs. Hungary's attractiveness is also attributed to its strong bilateral relations, friendly diplomatic ties and flourishing trade cooperation with countries like China. These investments are evidence that projects such as the Budapest Belt Railway, joint infrastructure and energy projects like solar PV park project invested by Chinese company. These investments underscore the potential for increased trade and investment flows facilitated by RMB internationalization. And that brings me to the topic I would like to discuss in more detail today, which is the growing presence of Chinese banks in CEE region. In recent years, we have witnessed the significantly growing number of Chinese banks establishing institutions in CEE countries. You can see the PBT reflecting the progress of China-CEE's financial cooperation. The financial market of CEE is greatly diverse, with both local and international banks operating in the region. By serving local customers as going out Chinese enterprises, we have a win-win situation as Chinese banks collaborate with international and local banks in the CEE market. Chinese banks also play an important role in RMB internationalization, providing RMB-related products and such services such as panda bonds, RMB loans, and RMB clearing and settlement. Furthermore, Hungary provides a conducive environment for innovation. In 2017, Bank of China issued the first RMB foreign UniPay debit card. And in the same year, the Hungarian government issued the first bond-connected sovereign panda bond. In 2018, Bank of China successfully listed the world's first structured note linked to the onshore RMB bond market on the BSE, further demonstrating Hungary's role as a renminbi hub financial innovation. As we delve deeper in the discussion today, I will elaborate on the opportunities for Chinese banks in the CEE region. First, I would like to share my thoughts on the opportunities that come with the increasing status of RMB payments in China-CEE's trade. Just as Mr. Xu mentioned, in March this year, 2023, RMB overtook US dollar for the first time to become the most used currency in China's cross-border trade and investment. Besides, numbers from KSH also indicate that RMB has been continuously gaining importance in cross-border trade and of goods payments, especially in Hungary's export to China. Since 2015, RMB has surpassed the US dollar in terms of its role as a payment currency, reaching its peak in 2017 and 2018, accounting for over 40% of Hungary's export trade of goods to China. Although there has been a slight decrease since 2019 due to the impact of pandemic, it has started to increase again in the following year, showing the resilience of RMB payment usage. These facts, I think, suggest a demand for more diverse RMB products and usage scenarios in the offshore market, which presents many opportunities for Chinese banks. Second, as the green framework is being promoted, it can create new opportunities for Chinese banks to be engaged in green projects and green finance. For example, China investment in green projects in CEE can promote the business potential for banks in the region. In addition, Chinese banks can leverage our expertise in RMB green bonds. Third, the continuous development of digital economy and cooperation between China and CEE countries will help to expand the market. Chinese investment in CEE's digital development, such as participants in 5G network construction, can create new opportunities for RMB financing. Ladies and gentlemen, what I have presented to you is a brief summary of perspective. There is an ancient Chinese proverb saying, "A single flower does not make spring, while 100 flowers in full bloom bring spring to the garden." 一枝独秀不是春，百花齐放春满园. As we look forward, there are tremendous opportunities for further cooperation and growth between China and CEE region. We believe that by working together, we can create mutual benefits for both parties. And taking these opportunities, I would like to express my sincere gratitude to the Central Bank of Hungary for your kind guidance and support during Bank of China's nowadays is 20 years anniversary. I also like to wish the panel discussion more exciting and fascinating insight. Thank you.
Thank you, Mr. Li, for your exciting lead speech. Now, ladies and gentlemen, we are moving to the panel discussion, where the panelists will discuss renminbi financing and opportunities of Budapest as a financial hub in the CEE region. I am glad to greet on stage Mr. László Vastag, Executive Director of the Magyar Nemzeti Bank, as the moderator of the discussion. Mr. Vastag is responsible for prudential and consumer protection supervision of money market institution. Mr. Vastag, welcome. Let me also invite participants of the panel discussion. First, Mr. Jiang Qing Chen, Deputy General Manager of the China Construction Bank Europe SA and China Construction Bank CCB Luxembourg branch. Before joining CCB Europe, Mr. Chen oversaw global loan capital market at head office, focusing on cross-border finance and international cooperation. His career in the financial sector spans over 2 decades and holds various positions at CCB head office, the Johannesburg branch, and several other CCB affiliates. Please also welcome Ms. Louis-Sue Fang, Chief Representative of China Development Bank Budapest Representative Office. Prior to her appointment, Ms. Fang served as the alternate Chief Executive of CDB Hong Kong branch. During her more than 20-year career at CDB, she has been engaged in credit management and gained a profound understanding of risk management and international business. And last but not least, I invite Mr. Xiaowei Zhao, Assistant General Manager of ICBC Europe SA and ICBC Luxembourg branch. During his career at ICBC, he held various positions in China and abroad. Most recently, he was the Executive Vice President and Head of Global Markets Division at ICBC Thailand, Head of Treasury Department at ICBC Tokyo branch, and Senior Business Manager at ICBC Head Office. Dear all, welcome. Mr. Vastag, I give the floor to you and the participants of this discussion.
Warm welcome to our distinguished panelists, and special thanks for accepting our invitation. The Central Eastern European region, based on its geographic location as well as its history, is well positioned to serve as a financial hub interconnecting Asia, China, and Western Europe. The countries of the region are keen to capitalize on this opportunity. Hence rises the question, in your view, what are the key attributes that might make a country stand out of the crowd and successfully achieve a key role as a financial intermediary between East and West? I suggest to do it as a roundtable fashion, so Mr. Chen, would you like to start?
Okay, thank you. Okay, thank you. I think there's 3 factors to consider. The first one is the differentiation strategy. How the country differentiates itself with other countries who has the similar ambition to serve as a regional financial hub. And what's the country's winning strategy? Is what about the country's regulatory and legal framework? Is that in line with such strategy? If I may use Hong Kong as an example, of course, Hong Kong is very close to mainland China and have the same language and culture and has been long serving as a gateway to the East. But the country in CEE region, surely they cannot copy the Hong Kong's success model, but they have their own advantage, which they enjoy the very unique geographic location between East and West. Any strategy, I think, should make full use of these kind of advantages. And based on that, align the regulation and legal framework together with such kind of strategy. And second factor, I think, is a financial ecosystem which can materialize the strategy. In the past few, if I may take Hungary as an example, in the past few years, I can see a lot of impressive progress made by government in terms of adapting departmental functions, upgrading financial infrastructures, and also diversifying liquidity reserve and encouraging economic exchange. But the financial ecosystem will require more than governmental actions. It will entail concrete actions from companies, banks, financial institutions, and professional service providers. So a good way, I think, to connect all these parties together is to formulate a concrete financial solution to support specific projects. For example, we can see a lot of trade and investment flow between China and Hungary. So if a financial solution can be tailor-made and offered to companies in this business area, this certainly will bring momentum to the financial community. And based on that, government regulation can adapt to such kind of solutions and enhance the efficiency of the transactions. A higher efficiency and lower cost will encourage more participants into the transactions, which can gradually build up an active market and some momentum for the local financial ecosystem. And the third thing I think is also very important is the entrepreneurship which can stand up to the future. We understand the future means opportunities and challenges. So to stand up the crowd, a country should be able to stand up to the future. And entrepreneurship is essential in both when we deal with challenges and opportunities. So in summary, to stand up the crowd, we should be either to do better or to do different. In current stage, sometimes it's difficult to do better because if we compare with international financial centers, it's difficult to do better on FX, money market, debt capital market. But having said that, two different strategies can be more realistic for a country in CE region. And do better in a few areas can also be better and can also be attainable. So find a winning strategy, align the policy to support the financial ecosystem, and apply entrepreneurship in the process, I think can make countries stand out of the crowd. Thank you.
Okay, thank you very much. Ms. Fang?
Okay, thank you. As Mr. Chen mentioned, Hong Kong, I used to work in a CDB Hong Kong branch for many years. So I'd like to share some information about how Hong Kong became an international financial center. Maybe as he said, Budapest maybe couldn't step by step follow a copy Hong Kong. But I think there are something, maybe lessons Budapest can learn from. You know, Hong Kong is a small fishing village. From 1979, China implemented reform and opening policy, and Hong Kong benefited from China's impressive economic takeoff and the opening to the world. So Hong Kong as an intermediary between China and the West. China also took advantage of Hong Kong to use renminbi as cross-border trade payment currency. And in 2007, our bank, China Development Bank, issued the first dancing bond. It's offshore renminbi denominated and settled. So it's a pioneer for the Hong Kong's offshore renminbi market. Meanwhile, that time, the global crisis hit Americans' financial system. So Hong Kong seized the opportunity, the historical opportunity, maybe once in a lifetime. So Hong Kong turned to truly establish the status of global financial center. So I think the point of Hong Kong's success may be the first, its location, not just a geography location. One side, Hong Kong, as he said, Hong Kong close to China mainland. One side is China with huge production capacity, and the other side is the world with huge market demand. So I think it's very, so Hong Kong people call themselves a super connector. Okay, I think it's very similar. The location of Hungary, of Budapest, like a bridge connect Europe and China. So although it's not a seaport, the government is pushing Budapest or Hungary as Central Europe, I mean, the freight and the logistic hub, and to make an important player in this region. I think it could provide solid material foundation for building a region financial center. And I think the second is the timing. I remember someone, maybe his name is Zoltan Pozo. He said, we are witnessing the birth of a new world monetary order. He was born in Hungary, if I remember correct. His opinion about Bretton Woods III, it's very interesting. It's undeniable. Our times are full of change, and change means opportunity. I think who chase this opportunity will stand up in the building region financial center. Okay, thank you.
Thank you very much. I believe that it resonates with the previous comment that it requires an entrepreneurial approach from the side of the country. So the right mindset is an asset. Mr. Zhao?
Yes. In fact, I totally agree with our colleagues. And the first is, if we would like to be a financial center, we should have the stable law and clear regulation, and maybe communist connection to the world. And we also need some professional service, like the legal firm, like the other agent. I think it's very important for all of the financial center. Ms. Fang just mentioned the timing. I also agree with that, because right now in the world we have already so many financial centers: New York, London, Hong Kong, Singapore, Tokyo, and so many centers. So, but right now we are in the position to face the future, and right now we have already got so many new technology. For example, last year when I was still worked in Thailand, in fact, I have already joined one project between some central banks, like the PBoC and the Hong Kong's. And also the Bank of Thailand and the Central Bank of UAE. They set up a program to bring a digital currency bridge between these 4 central banks, and also some commercial bank joined. And they will provide another service for the digital currency. And they will provide the connection different from like the SWIFT of the SIPs. This another way they use the blockchain technology. So I think right now, if we would like to build some, the possibility for some new financial center, maybe we need to think about the new technology to build up some advantage comparing to the current financial center.
Okay.
Thank you.
So basically, commercial projects based on innovation. So a concrete proposition supported by innovation, which is an important feature. Just coming back to your institutions, maybe I should have started with that one. Could you explain that when it comes to your institutions, what is the strategic focus of your institution when it comes to international presence, especially your presence in the European region or in the Central Eastern European region? Can we start with you, Mr. Zhao?
Okay. In fact, I'm a new member of ICBC Europe and ICBC Luxembourg branch. I just arrived here 4 months. Before that, the information that I had already showed that I worked in ICBC Thai and ICBC Tokyo branch for totally 11 years. For the new institution that I joined, ICBC Euro, I should say like that, I think our BOC, CCB, and CDB, and we have the same requirement from our customer, that more and more customer come into the Europe, maybe from 20 years ago, maybe from 30 years ago. And as a Chinese bank, we have the same culture. We have the advantage of the language, and we can understand their demand deeply. And we can also provide the same level service for them as the local bank, as the other international bank. So we also would like to go out with our customer. And this is the first point. The second point, why we are here, is we also would like to be the bridge between the China and the Europe. I think the connection is very important. However, between the company, between the individual people, and also between the financial institution, if we can we can have more and more communication. And I think the two countries, the peoples of two countries, can understand each other well, and we can bring more opportunity for our customer. I think that is my understanding about the aim of ICBC to join the euro area.
Thank you very much. Ms. Fang?
Thank you. Give me this chance to introduce my bank. I come from China Development Bank. Compare with ICBC and CCB, they are commercial banks. Our bank, we are positioned as development finance institution. It's established in 1994, state-funded. Our business focus on the major, the medium and long-term economic policies. So we provide the wholesale loans, support infrastructure construction, and basic and the pillar industry, and the public services, and rural-urban integration, and balance the region development. We don't offer personal retail services such as deposit or credit card. It's not our business area. And we support Chinese company going global, following the principle of mutual benefit and the win-win cooperation. And we do effort to expand the relationship with the foreign governments and the financial institutions and the enterprises along the Belt and Road region. And we are committed to building the stronger risk management system to ensure the safety of assets. Our total assets are more than 18 trillion, 18 trillion by the end of 2022. And our NPL ratio below 1% for almost 2 decades in a row. Our Budapest...
That is quite impressive for a development bank.
Yeah, I think so. We are proud, yes. And our Budapest representative office was officially registered in last year, October, you know. It's 11th of our bank's overseas office, and the first in EU, European Union. We are the first office. So it's a very important step in our expanding and enrich our global business network. So in the future, we are based in Budapest and relying on China CEE Interbank Association and focus on the client liaison, business consulting, market survey, and other works. So we hope to strengthen the cooperation with commercial banks, Chinese banks, and the foreign banks in the following aspect. The first, import the international capacity, international connectivity, such as China-Europe Railway Express, in the improve the capacity of freight and logistic hub. And the second,
which is most probably a project which would be too risky for the commercial banks, and therefore it requires development bank funding.
Yes, okay. As I mentioned, the project finance is our main business, so we like to the cooperation together to funding this project finance. So, and the second, we want to develop support the development of Chinese new energy companies in CEE. Yeah, this is the future mission. Yeah,
okay.
Thank you.
Thank you very much. Mr. Chen.
Thank you. CCB Europe, actually, I think is one of the CCB's if I can put it, is very important overseas institutions. We headquartered in CCB Luxembourg with 7 operating entities in continental Europe. And so other than Luxembourg, we also have a branch in Amsterdam, Barcelona, Milan, Paris, Warsaw, and the latest branch, CCB Europe Hungarian branch, just opened, has its official opening ceremony on April 19th. That's about 2 weeks ago. And some of our guests here is also our honor guest for the opening ceremony. Thank you very much for your attention and your support. And alongside with the CCB Europe, CCB also have a branch in Frankfurt, another branch in Zurich. In addition to corporate banking, these 2 branches provide clearing service in Europe and RMB respectively. And speaking of a strategic area, certainly CEE is one of our strategic area for CCB Europe and even for CCB Group as a whole. We have Warsaw branch, we have a Hungarian branch, which is covering the neighboring countries. But we also have a team from our head office, CCB Europe head office, which is in Luxembourg, which can cover the strategic deals in this region. So with the partnership with the local international banks, direct client relationship with the local companies, and recently opening Hungarian branch, I think CCB Europe is better poised to increase our portfolio in CE region. Thank you.
Okay, thank you very much. Mr. Zhao, you mentioned that to a certain extent it is the requirement of your clients who would like to invest in Europe or in Central Europe, that they would like to see, to put it like this, a friendly face when they come to a bank. So they would like to do business to a certain extent with the Chinese bank when they do business in Europe. Where do you see the main differences between the banking, the Western European banking, and the Chinese way of doing business in when it comes to banks?
Okay, let me explain my idea like this. In fact, because of the culture, because of the language, we can build up a new relationship, or how can that keep the relationship that we have already owned in China. It is a little bit easier than the Western banks when we face the same Chinese customer. That is the first. But that doesn't mean that we can easily get the business or get the close relationship with the Chinese company. In fact, according to my own experience, for example, in other countries, some Chinese company, they also prefer to use the local banks or some international banks firstly. Okay. Yeah, because as we have already introduced, we are not so big in Europe or in any other countries. In here, we are small banks. We don't have so many, for example, branch or some other, how can that, yes, maybe just say the per branch. So if a customer, they didn't set up the office in the Budapest, they set up the office in other city. And when we would like to have the good communication with the customer, maybe the local bank have their advantage. And the local banks also have some other advantage, like they are familiar with the law. They are familiar with maybe the revenue department or the regulator, something like that. So, however, the Chinese bank or local bank or some other international banks, everyone has their own advantage. Our purpose or our aim is just to help our customer based on what we have. And we can work together with our local partners, with our local banks, with other international banks to work together to provide the good service to our customer, however, local customer or Chinese customer. That is my understanding about this.
Yeah, very good. Thank you very much. Ms. Feng?
As I mentioned, we are a development finance institution. So I want to share my experience in the syndicated loans with the European banks. When the participation in working capital syndicated loans is going well because we have very similar the land standards and risk assessment factors very similar of Chinese bank and the European banks. But when it comes to project financing, the situation may be complicated.
Okay.
Yeah, there are differences. So, because we provide many the project finance, so in my portfolio, so we follow the prudential policy. So we set different capital requirements for different industries. And when we calculate the repayment capacity, we evaluate the cash flow generated from the project. And we don't consider the refinancing as the repayment source. But the European or American banks, even the traditional project finance, they will design the refinance as a repayment source, as a the refinancing transaction. And more aggressive, they use term loan B.
Okay.
Term loan B, you know, they will, they will transfer larger payments to the initial investor. So at the loan maturity date, this production doesn't match our risk appetite.
Okay.
So I think the project finance, there are some difference between the Chinese bank.
Hence your impressive NPL ratio, which is okay. Mr. Chen?
Yes, Mr. Vasta, you're talking about the smiley face. I think we are bank. We are the side should have the smiley face. Actually, there's two parts of your question. I think the first part is about working together with Western banks. In my previous career, I think it's quite important for CCB here as a foreign banks in Europe. We work together with local and leading international banks. The first question we always ask ourselves is like, are we working with someone who understands the market, understands the industry, understands the risk? So in Europe, European banks and some international, some US banks, they are the market leader. So it's always like important for us to work together with someone who knows the market. But there's another part of your question is regarding the Chinese company investing here. So here is like, I think CCB and together with the Chinese banking peers, like we have our own value. Because we understand the east side of the market and east side of the company, so we understand that part of risk. But having said, we're still open to work together with European and some Western banks. So you can see the services provided jointly. And in my personal career before, I quite enjoy working with international banks. It's always like it's always good to learn from someone else. Yeah, thank you.
Okay, so the cooperation is a key, and that's how you could best serve the interests of the clients in the on the European market as well. Obviously, renminbi financing is a key issue, key topic of this conference. How do you see the evolution of renminbi financing in the European markets, let's say for the next 5 to 10 years, especially in the CE region? Where do you see the key, how should I say, strategic areas where renminbi financing might take momentum in the forthcoming period. We should start. Can we start with you, Mr. Chen?
Okay, this can be a very long story. But I think like there are some, if I try to think as a banker, there are some factors we have to consider. First one is on the technical level. I can see there's some, for company, if they have both import and export with China, so it makes sense for them to finance in RMB, which this is a natural hedge to manage currency risk. The same applies to the economy. If the economy has import and export from China, so it also makes sense for the economy to do finance in RMB to manage the FX risk. And recently, with the interest hike of dollar and euro, we see there's a widening gap between the benchmark rate of RMB and euro. So it makes sense like for a company to borrow in RMB, which the benchmark rate is lower, of course, provided there's a natural hedge on the currency risk. So that's the first driver. And the second driver, I think, is more fundamental, is the long-term economic cooperation between China and Europe. And we understand, unfortunately, the war, and there's a lot of uncertainties, and the inflation is very high. So it makes more even sense to keep a stable and smooth trade relationship between Europe and China, and also, of course, between Europe and with other countries who is able to provide goods in a reasonable price. And this is vital for all of us to maintain our daily living cost. And this is not going to change economically because there's more benefit to everyone who can work together and cooperate to make things goods in a more efficient way. So economically, this is not going to change. So that's the second layer of the driver force. And the third layer, I think, is more like vital, and it can also even involve in national security. 20 years back, I think most of people in the world, they are happy to use dollar. Even myself, as a new banker in this industry, we still think dollar is a very strong currency. Then from 2007, 8, 9, 10, there's financial crisis, there's euro crisis. So maybe people have a second thought, like, okay, it's okay to have a dollar, but no matter if there's a crisis, the economic benefit of countries, non-dollar countries, will be ripped off because there's no alternative. But at that time, I think still some people, they don't have a choice. They are not happy, but they don't have a choice. And in recent years, I think there's new signs of it. I'm purely talking as a banker. We saw some signs like dollar has been weaponized. So if a country is in the threat of being suffocated by kind of comprehensive sanction, by threatening of like stop using dollar so the economy can suffocate, I think this will involve in national security. So there's a lot of layers, like we think like RMB, and even together with Europe, more choice for a country, I think, is a benefit of to protect their economic benefit and also to protect their national security. Thank you.
Okay, thank you very much. So besides the commercial reasons, there is a diversification effect as well. Okay, thank you. Very interesting. Ms. Fang?
As I mentioned, our representative office just established here for half a year, so I'm still learning the situation of financial market in Europe. But also I want to share some in Hong Kong. As we talk the first topic, I said some the offshore renminbi in Hong Kong step by step. First, we use cross-border, and then the RMB internationalization. So I think the initially, offshore renminbi in Hong Kong, CNH, its demand is boosted by the cross-border arbitrage trading. Yeah. I don't know this word arbitrage is right, but I think so, because there are the difference between the CNY and the CNH.
The mainland
yeah,
and the offshore.
There are two markets, onshore and offshore. So the investors seek the profit from the exchange rate appreciation and the interest rate difference to get the income and profit. So, but I think in the future, offshore renminbi offshore must be a real need, not just a tool for arbitrage. It must be real need. Now in CEE, especially Hungary, sorry, many Chinese companies, as Hungary the investment destination, they choose here to invest. So, and at present, the major currency, the interest rate such as dollar is rising, is higher, and relatively the renminbi rate is lower. So I think it's a window here for the Chinese companies invest use renminbi as funding.
Cheaper source of funding.
Yeah, I think so. One said it can save financial costs, and the other, they can form some high quality renminbi assets. That is high quality as investment production for European investor. It can push offshore renminbi health development. It's my opinion.
Okay, thank you very much. Mr. Zhao?
Yes, my personal area is the financial market, is like the FX spot, money market, and the derivative. So I would like to say something from this area. I think for RMB, for the RMB internationalization, is the big problem is the use of RMB. As the data from PBoC of last year, that the percentage of the use of RMB becomes more and more. But we can see that most of increasing come from the capital purpose. For example, some foreign investor invest the RMB bond in China market, so there will be more RMB flowing, cross-border flowing, something like that. So I have talked with some customer in Thailand, and I saw that there is a problem. If the customer's cash flow can be a circle linked to RMB, for example, they import something from China and then export to China, they can totally use RMB, no problem. But the problem is some customer import material from China and then export the product to Euro or to US. They don't want to use RMB. I think this is the main problem for the RMB. For example, right now, some company in CE, if they just import something from China and sell the same product in the country, and I don't think that they have big demand to use RMB. This is first. I think it is difficult for the commercial bank to push the RMB. We also need the cooperation from our corporate partner. This first, and the second is the risk management. We know that if, however, the bank of the company hold RMB, they need to manage the risk. However, interest risk or the FX risk, and we know that, however, CNH or CNY, And I use a simple way. The interest curve don't have long history. And for the derivative who can manage the rate risk, also not, how can that, enough. For example, right now, if we would like to provide the FX swap, however, comparing with US dollar or euro, maybe the effective price cannot be more than 5 years. If we do CCRS, maybe can extend it to 7 years or a little bit longer years. In generally, I can see it is not enough for the customer.
Sure.
So that is also the big problem for RMB, because however, the company and the bank cannot manage the risk totally. So this is the second problem. That is my understanding about the RMB difficulty in future. So I think we still need some time. We still need some time to build up the more effective product of the RMB, and to build up the whole circle of the use of the RMB. Yes, that's my understanding.
Okay, so basically it will be a general process. Sorry.
If I may refer to Mr. Zhao's comment, of course I agree. Like there are some difficulties, and to promote the usage of RMB, and it will take time to be an international currency. But the business model actually we talk about, if we think not RMB is dollar, for Hungarian company who they can either import from US or export from US, most companies have only one side of the story. So in this regard, it's the same difficulties as RMB. So that's why I'm saying, like, if it's a natural hedge for a company, if they both import and export, but sometimes we should broaden our view to look at the whole economy. I'm sure there's a lot of companies, they have one side of import. There are some other companies, they have another side of export. So if there's import and export flow from the country's point of view, I think there's some areas we can promote to use RMB. The difficulties here is like we need to make a tailor-made solution, create some liquidity in the local market. In other words, if the export company, they want to export to China, they receive RMB, they can convert this RMB at the local market, or they can hold RMB, they invest RMB assets. For an import company, if they need to import from China, they can borrow RMB locally and use RMB to pay the suppliers in China. So the business model actually is the same if we replace RMB to dollar, is the same. So the only difference is like RMB is still in the nascent stage. The financial ecosystem is not there yet. The financial solution tailor-made is not there yet. But I'm glad to see like the governments, from various governments, they're taking actions to try to cultivate some kind of like this financial market. So it'll be a process. When there's RMB is like readily used or borrow from market, and they are free to hold and invest, and they can transfer freely, I think in terms of logic, it makes sense. Like this RMB and Fulin or any other currencies, direct conversion can reduce the conversion cost, can increase the efficiency of the payment.
Sure.
Yeah.
Understood. And but I believe that it resonates with what you said, that in order to develop the renminbi market, you have to develop the underlying commercial relations between the companies. And the companies should demand payment in renminbi, and that will somehow automatically contribute to the development of the renminbi markets as well. Of course.
I forgot one point. And in fact, this is our Chinese bank's responsibility. We from China, and we should take the responsibility to enlarge the use of the RMB. And in fact, we are trying our best to do that. Thank you.
Thank you very much. We are approaching the end of our discussion, and I would like to have just one question dedicated primarily to the gentlemen who have presence, whose institutions have presence in the European market and in Hungary as well. That at the beginning of the discussion we mentioned that to be a successful financial hub or a renminbi hub, you have to have a supporting regulatory environment as well. Do you see any obstacles, let's say in case of Hungary or in this Central European region, which need to be come across in order to help the success of the CE region in that respect? Can we start with you? Yeah.
Thank you. I think I will not call it obstacles, but if we think the other way, is there any gap on the alignment between the strategy or the ambition between and the regulations? So this is something we need to think about. I think the purpose of financial regulation is for sustainable growth while maintaining financial stability. And the best regulator, they know how to shape the competitive advantage of the country, not just to control the risk. And so it actually makes sense, if a regulator can start with some kind of pilot policy or trial policy on a smaller scale, and to promote new business, new banking activities, and see how it goes. In other words, this new policy can be targeted to some, or waiver can be targeted to some banks, and without sacrificing the stability of a macroeconomy. And if I may take CCB Hungary branch as an example, we are small, we don't take local retail deposits, so there's nothing about consumer protection. And we still small in our balance sheet, so we are not going to create trouble for your macroeconomy. And also, we have a potential to be, of course, working together with Bank of China, ICBC, and other Chinese banks to promote local RMB business. And RMB still is a small portion compared with the fully US dollar, Europe. So think about something, new policy, or on trial basis, and promote this new market, new currency, new transactions, and see how it goes. I think gradually, step by step, yes, I agree Mr. Zhao mentioned it's our responsibility, we promote the usage of RMB, but we also need support and guidance from the central bank and regulators.
Sure, thank you. Mr. Zhao?
Only one point is the first point that I have shared my idea about to face the new technology, because maybe the future we will see more and more new technology, for example, the blockchain. And maybe the Central Bank of Hungary and the PBoC can build up more and more close relationship to set up some new product that can provide the more convenience for the financial institutions in 2 countries and the company in two countries.
Okay. Yes. So innovation and digitalization is a key in that aspect as well. Thank you very much. Yeah, Ms. Fang. Sorry.
Thank you. Okay. As mentioned, our office just registered last year, and we don't run the day-to-day credit business, so it's very hard for me to see the regulated obstacle. But I want to say thank you for we see the professional and the warm help in our application process, so I want to say thank you.
Okay, thank you very much. So thank you very much for your this very interesting discussion. And as you pointed out, communication and cooperation is a key for a long-time success. So let's hope that we can, how should I say, have these kind of or similar discussions in the future often. Thank you very much.
Thank you to Mr. Vastag. This was indeed a thought-provoking conversation. As our first panel ended, we are going to have a lunch break now. Then we will move to the afternoon session, focusing on sustainable finance, green funding, and opportunities for central banks. For our guests who are here with us at the venue, we hope you will enjoy your lunch and have a chance to discuss further these interesting topics. Dear all, thank you for staying with us at the Budapest Renminbi Initiative Conference 2023, and a warm welcome for those who have just joined in. The forum continues with second session titled Sustainable Finance, Green Funding and Opportunities for Central Banks. The topic is handled with high importance within the Magyar Nemzeti Bank. In 2021, first among European central banks, the Magyar Nemzeti Bank acquired a green mandate, what is instrumental to transforming our economy in a sustainable one. Please let me now invite you to watch a short video about the WWF-approved Habitat Restoration Project, which was funded with the goal of compensating the CO2 impact resulting from our operation, including the footprint of this conference. Woo!
The MNB proudly announces the carbon neutrality of all its conferences, and as all of them, this is also a carbon-free event. With reforestation towards a greener financial system, 50,000 trees herald the central bank's green transition, and this number will increase in every year. The Hungarian Central Bank was among the first in Europe to receive an environmental sustainability mandate as one of its core tasks. Magyar Nemzeti Bank promotes the green transition of the financial system through incentive programs, recommendations, analyses, and discussion papers. The Hungarian Central Bank intends to set an example for Hungarian financial institutions by reducing and neutralizing its own carbon footprint. In line with this objective, the MNB offsets its carbon emissions caused by its own operation by financing habitat restoration projects every year. The MNB implemented a smaller pilot project in PBoC as a start. Then, in 2022, it financed a reforestation project the size of almost 40 football fields in Gest, in order to offset the impact of emissions from its own operations. The central bank is committed to maintaining this practice in the future.
Dear audience, similar to the first part of the session, we will have a lead speech by Mr. Ádám Banai, Executive Director of the Magyar Nemzeti Bank. Other than being Executive Director for Monetary Policy Instruments, Financial Stability and Foreign Reserve Management, Mr. Banai is also member of the Financial Stability Board and leader of the China Working Group at the Magyar Nemzeti Bank. Mr. Banai, the stage is yours.
Thank you. Thank you for the opportunity to be here. And as we heard in the morning session, greening the financial system and sustainable projects are very important in the Chinese-Hungarian relations as well. And you have seen in the video, actually you've seen in the video of half of my presentation, but you have seen many activities what the Central Bank of Hungary are doing in this field. And about 5 years ago, when we started to talk about greening the financial system or sustainability in central banking, everybody was a little bit surprised in the audience how central bank is coming to sustainability, what is the role of a central bank in sustainability. But fortunately today, it is not a surprise, and everybody understood that to meet our mandates, to reach our goals, primary and secondary goals, we have to think about sustainability and we have to act because if you think about price stability, we cannot reach when there is a heavily changing climate. Regarding financial stability, we also can see that, for example, because of collaterals due to climate change, many damages can affect directly the financial system. So these are just a few examples to show why a central bank has a role in sustainability, because without making steps forward in sustainability, we cannot achieve our goals. And as I said, 5 years ago it was a surprise, but today we can tell that most of the central banks has at least some goals, some ideas about sustainability. I just showed 2 examples. The European central banks started some minor projects in sustainability, and the People's Bank of China has a very comprehensive work on sustainability, which is a little bit closer to what we do in the Central Bank of Hungary. And let me talk about what we are doing in the central bank as a host. We have to show it, and because we are very proud on it. And as I mentioned, we have a very comprehensive approach regarding sustainability, and the reason is that we don't wait for an ultimate solution, because we don't think that we will have an ultimate solution in this field. We started in every possible direction to work on sustainable projects. And if we look at the central bank's different fields, in every field we are working on sustainability. So in monetary policy, to reserve management, from macroprudential policy to supervision, until our own operation, we did some smaller or bigger steps towards a sustainable financial system. So let's see what we have done until now. For sure, it is the start of a long work. I think it is a work for our lifetime, but I believe that what we have already done, it is very important and very good examples, which probably should be followed by other central banks. So let's see first the monetary policy. And when we started to think of those fields of the Hungarian economy or in Hungarian society where we can reach the strongest improvement, we found out that one of the main fields should be is housing. The reason is because the Hungarian housing sector consumes about a third of the whole energy consumption of the economy, which is very huge. And what is a real big problem, that in the last 20 years in efficiency, we didn't really take any step forward in housing. So other economies could decrease their consumptions relative to the size of the housing stocks, but we didn't reach any improvement. So this is why we found out that we can have the first monetary policy projects in that field. And our flagship project was what we started about 1.5 years ago, was the green mortgage program. And what we have done, we lent the banking sector funding on a zero fixed rate to relend to borrowers who wanted to buy green homes. And it was a very successful program, since during the program a very big chunk of new housing loans went to the household sector via this program. So we reached close to 10,000 households, which is a huge number in Hungarian comparison. And not only the green mortgage program was very important the households and for the housing market. But we also launched in 2021 the Green Mortgage Bond Program as well. So we not just ensured some kind of direct financing for the banking sector to lend forward to households, but we also started to buy green mortgages, mortgage bonds, to also support the financing of green mortgages. And the reason behind it was not just directly help the market, but to build up a new market, because green mortgage bond market doesn't really exist before we launched this program. And I think the great achievement of this program was that all the mortgage banks of Hungary started their green mortgage bond program within their bank. So all the Hungarian mortgage banks are ready to issue green mortgage bonds. And although we are not buying actually because of our new monetary policy focuses, but these banks are able to issue green mortgage bonds, which is very important for the future as well. Within our work in the central bank, we started to turn our collateral management as well into a more sustainable direction. So we started to give green preferential haircuts for green bonds. And what we require for it is transparency. So first, with it, we give preferential haircuts for the banking sector, which is a direct incentive. But on the other hand, we have the market with transparency to improve further, which is also a very important factor on a longer horizon. We also made, and it was among the first steps what we have done to greening the financial system. We made a dedicated green portfolio within our FX reserves, and with this dedicated portfolio, we can avoid CO2 emission of about 15,000 people municipality, which is a huge result on the FX management side. We also included some green aspects in our macroprudential policy, although we have room further, but we did here as well the first steps. And one step was the mortgage funding adequacy ratio, in which we implemented the preferential management of green mortgage bonds. So it was for the banking sector to issue green mortgage bonds in the from a macroprudential point of view, because it's easier to reach the target if you have green mortgage bonds. And with the direct buying of green mortgage bonds and with the incentives from a regulatory part, we reached that about 10% of the whole mortgage bond stock is green, which is a huge result, I think. We also included green aspects in one of our flagship product, which is the consumer-friendly housing loan. We started to do this trademark many years ago, and it became one of the most popular loan product in the banking sector. And this year we started to put in this product as well some green aspects. And if you can get this loan as a borrower, you have some lower fees, some preferential conditions with it, which is important from a borrowing point of view. And for sure, from a banking perspective, it is also important because it is a popular product to be part of part of this program is very important for you as a bank, because you cannot keep your customers without putting to your loan book this type of product as well. And for sure, we did some steps from a supervisory side. I think the most important part was the green preferential capital treatment. So for certain green products, the capital requirement is lower. Many of the banks are using these products. More than 500 billion of assets are within this framework, which is a huge number, and it shows that the banking sector was ready to use this, and it is important then for the banking sector, and it helps the banks to issue more green products or to buy more green bonds. And last but not least, it is very important, not just our own operation, but to lead by example. And we publish many different articles and many different documents about greening the financial sector. And one of the key is the so-called TCFD report. We were one of the first central banks which published the TCFD report to summarize what the central bank is doing to be more sustainable and to support sustainability. And we are planning to publish it each year. The last one was published in last month in April, so you can have a brand new one from the website of the MNB. And with it, we show to the audience that we are not just talking about greening the financial system, but we're actually doing our best to be as sustainable as possible. So we want to be transparent on our side. We want to educate the whole sector, and not just the financial society, but the whole society, which is very important. And with our TCFD report, we try to cover all of our activity. We try to deep down to understand actually what we are doing, to show what we are doing, because without measuring what we are doing, we cannot improve our work. To be honest, we learned a lot in the last 2 years since we are doing this report, so it is very useful for ourselves as well. And I can say that it is the most comprehensive TCFD report among the central banks. To tell an example, about 98% of the financial assets of the MNB are covered by this report. So we really check what we are doing, and we can understand how we affect the climate, how we affect the environment. So it is a very important experience for us. And I think this whole summary showed you that the central bank is very active. I believe that these examples are important for not just other central banks, but for all the financial community. We believe that with these steps, we have a direct positive effect on environment, and indirectly we can also change the thinking of other participants, and this is why we are doing it. Thank you for the attention.
Thank you, Mr. Bonai, for your outstanding speech. It was a valuable experience to hear your thoughts. Now it is time to start our second panel today, discussing opportunities of central banks on sustainable finance and green funding. Let me invite first the moderator, Mr. Pál Péter Kolozsi, Director of the Magyar Nemzeti Bank. Mr. Kolozsi is responsible for monetary policy instruments, foreign exchange reserves, and risk management. Mr. Kolozsi, welcome. Let me also invite discussants of the panel. Please warmly welcome Mr. Alain Naef, research economist from the Banque de France, Mr. Naev, before joining the Banque de France, was a postdoctoral fellow at the Department of Economics at the University of California, Berkeley. Mr. Naev's research interests include international economics, climate finance, monetary economics, and financial history. Mr. Naev. Now I'd like to invite Professor Wing-Tai Wu, Distinguished Professor of Economics at the University of California, Davis. Mr. Wu is a well-known expert on East Asian economies, particularly those of China, Indonesia, and Malaysia. His research interests are in issues in sustainable development, including macroeconomic and exchange rate management, economic growth and development, economic geography, fiscal decentralization, and international capital flows, with focus on the economic systems of China, Indonesia, and Malaysia. Mr. Wu, welcome. And last but not least, it is my pleasure to invite our online speaker today, Ms. Pei Zhang, Deputy Director General, Research Bureau of the People's Bank of China. Ms. Zhang is a senior economist and has a PhD in economics from the Tsinghua University PBC School of Finance. Her research interests focus on monetary policy framework, inflation expectation, macroprudential policy. Ms. Zhang, thank you for joining us.
Thank you.
Dear panelists, it's lovely to have you here, and the floor is yours for the discussion.
Thank you very much, and good afternoon to everybody. I have to say that it is a great pleasure and honor to be here and to chair such a fantastic panel with well-esteemed colleagues from China, from the United States, and also from France. So we have a very interesting topic and very interesting panel as well. At the beginning of that conference, at the high-level opening session, there it was mentioned that the gravity of the global economy is going to east, so from the Atlantic to the Pacific, from Europe and the Americas to Asia, and essentially to China. And I think that we can also agree that maybe that can be a consequence of the fact that these Eastern economies, so the Asian economies can respond or are trying harder to respond to the new challenges that we are facing, essentially the green transition and environmental sustainability as well. I think that we are here because we think that the financial sector and the central banks, especially, have a special role in that process. That we have to be some kind of catalyst of the future, and that future will be somewhere green and also digital. So that's going to be something very, 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 very new. And central banks as a core player in the heart of the financial system in every country has a special responsibility in that. So to start our conversation, I think that just let me highlight some facts and some numbers. I'm not a climate scientist. I'm an economist, and all that I can do is to accept the findings of and the conclusions of these scientists, and that's why I will use the conclusions and the findings of the IPCC report, which was published this March, just in some general conclusions. As a matter of fact, it is important to underline that human activities cause global warming, and we can also see that with global surface temperature reaching 1.1 degrees above the pre-industrial level, which is important because it means that climate change is not a kind of a bad dream. It's not something, a narrative. This is reality. This is here, and this is happening right now with us, everywhere around the globe, including the United States, Europe, and also China and all East Asian countries. Climate change is affecting many weather and climate extremes in every region. We have adaptation and implementation program. We have a lot of progress in that sense, but we have a lot of adaptation gaps, and these gaps will continue to grow at current rate of implementation. So we have not too much time to react. I think that is also important. And climate change is a threat. It's a threat to the global economy, but not only to the global economy, even if we are economists and we are working in the financial sector, essentially. But it is also true that we are humans, and it is a threat to human well-being, and this is also part of our responsibility to do something with that threat. climate scientists say that it is likely, and I will quote the IPCC report, saying that it is likely that warming will exceed 1.5 degree during the 21st century and make it really hard to limit warming below 2%. It is important that these were the two quite important goals which was in the Paris Agreement 8 years ago, and it seems that we will have difficulties to meet our targets. So that's why deep, rapid, and sustained reductions in greenhouse gas emissions are needed to see a slowdown in global warming. So concerning the financial part, financial aspects of all that, I think that we can conclude that we will face physical and transition risks in the next decades, and maybe the combination of these two risks. How the combination will look like, it depends on our behavior and our decisions and our strategies, and including the financial system, but also of central banks. So Mark Carney, who is a quite famous economist in that field, said once that the whole financial system will be judged on that challenge. How we'll be able to respond to these needs of the society concerning green transition, because, and he said this is a $100 trillion challenge, because this is the order of magnitude concerning the investments needed to reach net zero in the next decades. So I mentioned already the Paris Agreement, and I turn to Professor Wu, because I would like to ask the first question to you, but also I'm waiting the comments and the answers of the other panelists as well. So 8 years ago in Paris, there was an agreement reached by the countries of the globe, so quite everybody was there. And 8 years passed already, so we are in 2023 already. So how do you consider the progress made so far? What are the most important results of the last 8 years from the point of view of the climate accords in the financial system? What was the role of public institutions and essentially central banks? And also I would like to add one more aspect to that question. 2023, so this year is a very challenging year for the global economy. We have inflation, we have financial stability issues essentially in the American banking sector in the US, but we cannot say that this is going to be a year without any challenge. So how do you see the possibilities of central banks to support the green agenda from that point of view, taking into also consideration the difficulties that we are facing right now? Professor Wu, thank you.
On the surface, it looks like we have done very well, because if you look at our emissions of greenhouse gases, it is much lower than projected in the IPCC update in 2018. The reason why it's been so much lower is because we had 3 years of non-growth thanks to COVID. And because of that suppression of production, because of public health concerns, which is the reason why CO2 had been suppressed. Now, if you were to talk about progress in terms of going forward, because the government has been spending most of its money on public health related programs, and also on emergency social safety net expenditure. The result is very little money is spent on making actions on climate change. And monetary authorities are equally distracted by the COVID. And now, so fiscally, we are stretched. And for monetary policy, it has been very loose. The quantitative easing continue in order to offset the effects of COVID, which is a very strange idea that monetary policy could actually work. Because after all, how could people work if they cannot go to work by public health regulations? Printing money is not going to solve the problem. So we have overexpanded M and increased G tremendously, government expenditure. Now comes the Ukrainian war. And the result is, if you look at money that is given to developing countries, that has been cut all across the OECD, largely because the money is going towards taking care of the Ukrainian refugees and producing weapons to contain the aggression that is seen. So the world has not been focused on climate change. And what is even worse is that even when, but rhetorically, the world has made huge progress. That all of Southeast Asia has proclaimed that they would achieve net zero emissions in 2050. But no one has a plan of how to do it. So the progress has been poor on climate change, but the progress is poor across all the 17 Sustainable Development Goals. Climate change is just one aspect of sustainable development. The other part would be economic dynamism and stability. And here, the central banks have done things that have threatened the economic stability of these economies, such that we see a resurgence of inflation. Of course, the inflation is not just due to the quantitative easing, it's due to the shutdown of factories and the disruption of the Ukraine war. So we are very off track. That's what it is. And September this year, we're going to have an SDG summit at the United Nations General Assembly. And I think I hope the world can commit to more stronger coordination on this front.
Thank you very much. Ms. Zhang, how do you see what's your opinion about the same question? So the last 8 years, how do you see the progress or the difficulties or the challenges from the PBoC?
Okay, yeah. Professor Wu said it's a big challenge. Yes, it's true. But on the other hand, there is progress. I think in the past 8 years, the most important result is the widespread awareness and recognition that climate change could have profound impact on the world and far-reaching implications for financial stability. So it leads to active actions among financial sectors. More and more central banks are taking measures to address the climate-related challenges. And I agree with Mr. Barnett, the speaker. He said that there is no ultimate solution, but we can just start our work. So the PBC has taken steps to continuously improve the green finance system, supporting China's green and low-carbon pursuit of high-quality economic and social development, such as developing a system of green finance standards, promoting environmental information disclosure, conducting green finance evaluation of financial institutions, and launching structural monetary policy tools to support green and low-carbon development, and conducting climate risk stress tests, and so on. Actually, from China's experience, the financial system is greener than it used to be in terms of the proportion of the green assets held by financial institutions. For example, the green loans accounted more than 10% of total loans at the end of 2022, 4.4 percentage points higher than the figure at the end of 2018. A greener financial system contributes to the greening of the economy, and the greener economy promotes the greening of the financial system in turn. Given the economic and financial turmoil, central banks could be a force for stability by promoting the green developments. Firstly, climate change affects the price stability outlook not only through its impact on macroeconomic indicators, but also through financial stability risks. For central banks aiming at price stability, ensuring a smooth green transition is one of important options to achieve the price stability goal. For example, supporting investment in green areas will bring safer supply chain, energy security, etc., or will contribute to the price stability. Secondly, it is of great importance to be aware of the risks in the operation of financial institutions. So ensuring a smooth green transition will facilitate financial institutions to manage transition risks. Thirdly, most central banks have similar mandates of price stability and financial stability. At the same time, climate change is a global issue. I agree with you. Yeah, it's a global issue. So international cooperation is of great significance. That's just a brief introduction of my view. Thank you.
Thank you very much, Ms. Zhang. As you mentioned, this is. I also agree with your conclusion, saying that the green awareness is quite important, and that there was a quite important progress in that context the last couple of years. The fact that we are talking about that topic here, and there is a lot of conferences, even here at the Central Bank of Hungary, we organize every year a green conference. It means that the awareness is quite growing, and maybe this is the first step of any action and any strategy from that point of view. But we also think here, and we have our experience are the same. The practical experience is also that. Any action needs, first of all, needs proper methodology and data to be able to implement anything in that context also. So the fact that we do not have really reliable data and proper methodology concerning the green risks or the green transition as it is, it can be seen as a main challenge. So what do you think about the initiatives that we are seeing in the public sector or in the private sector, or how do you see the role of central banks in that context? For example, the European Central Bank, because in Europe we have quite important work on the green taxonomy, and also we would like to hear the opinion of Ms. Zhang also, because the PBoC is one of the greenest central banks and a really innovative central bank, and the Chinese experience can be also very important from that point of view. Mr. Nayev, please.
Yeah, thanks a lot. I think, first let me say that I'm here mostly as a researcher, right? So, and that my views don't necessarily represent the views of the Banque de France or the Eurosystem. And maybe 2 points back on the point on data that you mentioned. I think it's hard to have some clear data, but data we have access to is market data, right? And with a quote of mine, Camille Macaire, we've studied a reform by the PBoC on green finance, right? We've looked at green bonds after 2018 reform that favored green bonds in monetary policy. So these bonds were used before other bonds in the monetary policy framework. And what we found in our study is that doing this reform increased the spread between green and non-green bonds by 46 basis points. So by using market data, we had access to a clear measure of how a concrete policy could actually impact green finance. And another huge step that we should be happy about is the creation of the NGFS, which we've created jointly at the Banque de France and the PBoC. So this is really clearly a big step forward to be happy about currently. Then maybe just a point on taxonomies. So I think these are very important. We have seen taxonomies developing in China and in Europe, not in the US is also to mention, right? So this is clearly a European and Chinese initiative. What's interesting, however, with these taxonomies is that it's a good first step, but as we've seen, the IPCC says that we should get rid of all fossil fuel, right? And the issue is that, well, the European taxonomy comes a bit short because gas is included, and that shouldn't be in a green taxonomy ideally. And Chinese taxonomies often include clean coal as well, which is also an issue, right? Sure, Chinese coal is potentially cleaner than old European coal or American coal, but it's still very polluting. And I think this is a clear weakness of taxonomies that needs to be taken into consideration.
Ms. Jiang, can you share with us some experiences from China, from that point of view?
Yeah, actually, I agree with you that data, information, and standards are prerequisites for the healthy development of green finance. The PBoC have taken several measures to lay a solid foundation for green finance, just as Mr. Neef had mentioned that we use the green bond as the collateral in the open market operations. It's quite helpful. And he mentioned the common ground taxonomy. Yes, it's a good start. Actually, the PBoC tried to improve the green finance standard system that are unified across the country, aligned with international standards and clear enough for implementation. The green bond endorsed project catalog. This is one of the standards. The catalog is taxonomy based, so it is clear for implementation. And the common ground taxonomy now includes 72 climate mitigation activities that are recognized by both China and the EU Sustainable Finance Taxonomy. Yes, based on our specific condition, we. But I think in this catalog, the clean coal is not included in this catalog. I think, but based on our specific condition, I think the clean coal should be included in the transition finance. Because it is quite important to ensure a smooth transition. As for the data, I think the facility we created, that is the carbon emission reduction facility, it helps to improve the data, because the use of the facility requires commercial banks to disclose information on carbon footprints, which must be verified by third-party independent agencies and subject to public oversight. So it plays a positive role in fostering green mindsets and changing the behaviors of economic entities and facilitating carbon accounting. So that's my point. Thank you.
Thank you very much. Professor Wu, you told me before the panel that you represent essentially here the United Nations Sustainable Development Solutions Network, which is a non-governmental organization. So how do you see from that position that question of lack of data? So is it the responsibility of public entities, or we can think that the market players or the private sector will give us the appropriate solution for that challenge?
When you talk about the lack of data and lack of methodology we can use, we think that is largely the result of the confusion on product differentiation done by the finance companies. What we are stuck on is trying to get a workable definition of ESG. That is what green finance has been on. I personally think that's a waste of time, because E is something we can measure, is the extent in which we are converging towards non-zero, net zero emissions. S and G are by very nature fuzzy concepts, hard to measure. Even if you could measure, what should be the weights which should be given to each of them? I think that's a waste of our time. The most important thing we got to focus on is that since net zero emissions is a global issue, what we have talked about, the great efforts that have been done by banks in China, in Europe, but we know that achieving net zero emissions in Western Europe and in China is not going to solve the problem. We need the rest, especially developing countries, to achieve net zero emissions too. But they certainly cannot afford to do it on their own, because we're talking about an investment program to transform their production sector, their energy generation sector. Money that's been promised in the Paris Treaty has not been given. And thanks to the war that's going on, the money has been even reduced. But what we need is a way for central banks to design schemes to mobilize private funding for decarbonization of the developing world. While listening to Professor Zhang Jun earlier this morning, it occurred to me that there is a way to accomplish decarbonization for the developing world in a way that also promotes the internationalization of the renminbi. But I'll be happy to talk about this if there's a related question on that coming along. Thank you.
Thank you very much. I think that question will come quite soon. Because you mentioned at the beginning of the session that it is important to make a difference between developed countries and developing countries. And in developing countries, what is the most important challenge and the threat is a lack of funding. Clear. We have a problem with the lack of data also, and a lack of proper methodology, but the fact that the funds are not going where they should go, it is a clear problem. So according to the IPCC and other estimates, and IMF and other international organizations have estimates about that, trillions of US dollars should be spent to meet our goals in developing countries. And what we are seeing right now, this is something annually like $500 or $600 billion flowing, which means that much less than we would need to meet these goals from the Paris Agreement. And I think that's a financial. There's a question of finance, how it is possible to manage that lack of funding. That what can be done to have these funds arriving in the developing countries. And you mentioned the responsibility of the schemes of central banks, but also it is not quite clear, I think, that what is the responsibility of the specific actors, of private commercial banks or investment banks or multilateral banks. We have structured financial products, and we have also other blended finance, etc., which could be important from that point of view. But all in all, I think that we should try to find the responsibility of each actor in that. So how do you see that problem of financing concerning developing countries? That what institution has the most responsibility in that? So where should we go, and what should be the best approach to have that problem? Because central banks, that can be an option, but central banks have a specific mandate in every country, and maybe other players can also be important. Mr. Knife, please. What's your opinion about that?
Yeah, thank you. I think so funding has been slow to come. So there's been this 100 billion that's been promised for development. I think this is a very important step, but we need much more than that, and it needs to be coming much faster. I think it comes really to the responsibility of richer countries. So I think the G20 is a good place to start. Right, these countries all have means that they can use and put in place, and G20 countries should really look at ways to fund this. And maybe one way of thinking about this is an idea we have in Europe is to introduce a carbon border tax. So the idea to tax any good that comes into a country which is not been taxed in its origin country, and that's a great way to raise taxes and sort of get out of Nash equilibrium where each country is playing for themselves. So this could either raise taxes in other countries by forcing them to introduce their own tax to raise money, or simply be used to share from richer country to poorer countries. So I think there's a lot to be done there, and it's interesting because it's a unilateral move which allows forces other players to also cooperate, and I think that's what's interesting in an idea like this, to find financing for the transition in poorer economies.
Professor Wu, how do you see that question?
I would say that poor countries are punished for being poor if you have this carbon tax at the border. Basically, they cannot afford to undertake that transition. I think, well, let me give you a numerical example that was inspired by Zhang Jun's speech about how one could mobilize the private sector. Clearly, if you look at the amount the official sources have committed, it is way below what is needed. The private sector has to be able to be brought in. It is very common for economists to say very glibly, oh, they need to borrow money. There is the international financial market out there, and if they are credit-worthy, they can get it. That is simply bogus, because most of only 2 African countries have access to corporate borrowing. And if you look at Southeast Asia, which the World Bank once claimed to be the home of the next generation of tigers, only 3 of them, of the 10, are able to access the international financial markets. And when they do, they cannot borrow anything longer than 7 to 8 years, and at a markup of 2 percentage points above what the rich countries would pay. But what we need for this great transformation is 30-year loans at 3%, because this is ultimately a great investment in infrastructure and production. I think that what we need to do is to greatly strengthen the development banks of the world. Because let's say China is willing to put down $10 billion to promote decarbonization outside. And let us assume that a portfolio of green projects in the developing world has a bad loan rate of, let's say, 4%. Well, the reason I say 4, because in Malaysia it's 1.6, Indonesia is 2.6, Brazil is 3.3. So let us say it's 4. If that is true, if China now allows this $10 billion to be used as the front-line capital, in other words, the first capital that will be written off if there are losses, what that means is the absolute size of that portfolio would be 250 billion, with China putting down 10 billion and borrowing 240 billion from the private sector, with almost guarantee that they would get their money back because the Chinese are willing to let it be written off. Let us say I exaggerate, let's say it's 5%. Then the portfolio is now 200 billion. If it is 6%, the portfolio is 167 billion compared to 10. So I think that what we need is leadership to be able to expand the development banks, the funding of it. But the capital base of development banks are not being expanded because of the United States' unwillingness to give up control of them. Some countries have volunteered to greatly expand the World Bank, expand the Asian Development Bank, but the existing majority shareholders do not want to expand it for fear of losing control. And so I presume that's why China started the AIIB in order to overcome that. So we need a great expansion of the capital base of the development banks, and whereby the countries, the official money is used as the frontline capital level. Now, we also have to have the right leadership in these development banks. The head of the World Bank said publicly he was not sure whether global warming exists or not because he's not a scientist. I've never been to the moon, but I know the moon is not made of cheese. So just because David Malpass was not a scientist, he had no right to say that, therefore, he's not sure that global warming does not exist. So, of course, coming to it, the renminbi internationalization comes from that. The 10 billion that China gives would be a renminbi denominated in renminbi. So this would be funding the green transition while moving forward the renminbi internationalization, which is needed for the diversification of risk in the world. So I think that this is what we should be focusing on instead of talking about how do we measure S and G so that we can get the right balance on ESG. The E in that case becomes not environment, but empty. Thank you.
Thank you very much. I think that this conference is about E, so this, but not the empty one, but the ecological one, so the environmental aspects. China was mentioned as an example in your intervention, but it is true that we see the PBoC as a great idea generator and the leader on green finance. Personally, me too, I had the opportunity to have meetings, online meetings with colleagues from PBoC about green instruments and green monetary policy. That was a really value added for us to have this that meeting and this exchange of ideas. But I just would like to turn to Ms. Zhang and ask. So what can, in your experience, what is the most important lesson that you could give to other central banks based on your experience concerning green finance, green transition, green monetary policy, green central banking? So what is the most important lesson that you have and your advice to other central banks? And one more aspects, and that here at the central bank we really believe in the so-called Pareto principle, which says that roughly 80% of the effects come from 20% of the causes. So it is possible to identify key players, key actors, key factors. So from that point of view and taking into consideration that principle, how do you see your experiences and what would be your advice?
Yeah, actually, I would like to say that we have made some exploration in green finance. So I would like to share our experience, but I dare not to say give advice to you. Yeah, actually, I think it's a new area, so all of us are exploring in this area. Actually, I think there are several points. The first one is that the green finance is ecosystem. That means there must be some prerequisites for the healthy development. For example, the establishment of the standards and information disclosure and the data infrastructure and so on. I think that is quite important. Second, I think we should mobilize both public sector and private sector. Actually, we have all kinds of policy levers. For example, we have the pricing policy levers, and we also have non-pricing policy levers. For example, we have the valuation of green finance business of financial institutions. So it gives clear signals to the market participants without direct intervention of their operation. So the private sector also have they can have their own discretion on their operation. They can identify which project is green and which project, and they analyze the risk of the project. So they also play an important role in this field. And I have another point to add. Actually, there's an observation that despite the rapid growth of the green and sustainable finance market in the past year, efforts to support climate financing have mostly focused on pure green or near pure green activities. Support to the broader range of investments needed for the whole of economic climate transition has been quite limited. So I think the key to carbon emission control is to be realistic and explore an effective framework for transition finance. It can improve the ability of sectors or firms to gain access to financing to support their transition. This, in turn, could help them mitigate the potential negative effect of a disorderly transition, such as the transition risks, restricted access to affordable and reliable energy, employment, and potential broader social impacts. Actually, the G20 framework for transition finance provides a set of high-level principles for members to develop transition finance, allowing flexibility in the formulation of specific policies and norms. The PBC has made a preliminary definition of transition finance, and we are working on the transition finance standards at the moment. We hope that this will facilitate a smooth transition to a greener economy. Thank you.
Thank you very much. As it was mentioned during the session, the time is a really crucial factor in climate change, but also in conferences. So unfortunately, we have arrived to the end of our session. I think that we can all agree that the challenge is huge. I think that even if we see difficulties, we see also possibilities, and we think that it is possible to reach our goals, and we can also hope and we can push for that good decisions have to be made everywhere, and even in central banks. And I am absolutely sure that in our central banks, especially in the Central Bank of Hungary, we will try to do our best to meet our goals in that sense. Thank you very much for your participation and your answers.
Thank you.
May I make a final?
Mr. Kolosi, I am sure we all found tremendous value in today's panel discussion. With closing our second panel, we have reached the end of today's professional program. I hope you all agree with me when I say we had a successful and rewarding day. Our speakers have guided us through the most topical and intriguing questions related to renminbi financing and major dilemmas facing the environmentally sustainable financial transformation, the current development of green financial instrument markets, and the opportunities for central banks involved. I believe that the Budapest Renminbi Initiative Conference 2023 has successfully highlighted the importance of international dialogue and sharing experiences, knowledge, and different points of view from distant countries. As closing of today's program, I would like to invite Mr. Mihály Patai, Deputy Governor of the Magyar Nemzeti Bank, to deliver some concluding thoughts and major takeaways. Deputy Governor.
Each good thing has to end at one point. We got to that point regarding the conference. So, distinguished guests, dear audience, ladies and gentlemen, my dear friends, at today's Budapest Renminbi Initiative Conference, we have proved from several different perspectives that cooperation is the way out from the current situation characterized by supply side constraints, inflation, challenges of energy transition, and geopolitical turbulence. Without a doubt, China has become a major global player in trade as a supplier and as a market as well. China became the world's largest trading nation in the mid-2010s, the largest export destination for nearly 30 countries, and the largest source of imports for 70 countries. The shift is also obvious in the financial aspects. While the dollar continues to dominate the global trade, as we have heard, share of trades denominated in Chinese renminbi have increased nearly 5 times in the last decade. In addition, renminbi in central bank's international foreign reserve has been playing an increasingly important role. In the last years, the number of central banks investing in renminbi-denominated assets is on the rise as well. Just remember, each session and panel have pointed out the potential benefits of interconnectivity and cooperation, maybe it in finance, green transition, or international matters of central banks. Let me just very subjectively highlight some ideas from today's conference. As for the opening ceremony, as Mr. Xi mentioned the old saying that Rome cannot be built in one day, definitely EU and China cooperation is the key for sustainable competitiveness. Therefore, we need to focus to make our partnership closer and more active. Finance and banking could be a catalyst of cooperation. But the most important point is to have patience because the whole thing needs patience. And I do believe if we have patience, then things will get better. As for the first panel, financial cooperation is a very important field of partnership between Europe and China. Therefore, presence of Chinese banks in Budapest and in the region is very important because besides the enhancing bilateral investments, they are also serve as a bridge between the two regions, between Europe and China. Again, we should not be impatient in this whole issue because, you know, Bank of China came 20 years ago, and it took 19 years that the next one came, you know. But it's happening. Things are happening. From the second panel, I got two points. It was interesting that one panelist was talking about impatience. Where is Mr. Wu? I don't see him. Yes. But then somebody was raising the issue that, but awareness is much stronger than was, 8 years before. We cannot underestimate that the awareness is here as well. So again, patience, what is a buzzword for me, and it was almost everybody agreed in the second panel that private business must be involved in the solution. That without private business, just the government and public money cannot solve this issue. So PPP, private-public partnership, is very important. My colleagues have written many other issues, but I try to simplify it. In conclusion, I hope that the supporting community of the Budapest Renminbi Initiative Conference has expanded again and will be further strengthened throughout the next year as well. In this spirit, I would like to sincerely thank all the speakers, thank you very much, all the listeners, and of course all the organizers. Thank you for my colleagues, and I believe that applause for my colleagues who have organized this meeting. They deserve it. Thank you very much for making this happen. And I would like to just close with one point that we are committed to repeat this conference. Also, be prepared that we will see each other next year. All the best.
Thank you to Governor Patai for that excellent summary. We have reached the end of our conference, ladies and gentlemen. Once again, I thank all of our speakers and participants for sharing their great insights and our audience for staying with us till the end. If you missed any of the speeches or you would like to rewatch our sessions, kindly visit the Budapest Renminbi Initiative Conference website or the Magyar Nemzeti Bank's YouTube channel in the upcoming days, as the whole conference will be available on demand soon. In addition, we'd be delighted to welcome you at the Magyar Nemzeti Bank's next conference, the Budapest Eurasia Forum 2023, to be held between the 23rd and 24th of November in a hybrid format. The conference will discuss the most relevant and ongoing transitions we need to follow for sustainability. We hope that we can welcome you among our guests in person, or please join the conference on Zoom. I wish you all a great afternoon, and I hope we meet again at the Budapest Renminbi Initiative Conference in 2024. Thank you for your attention, and have a lovely day.